Hello everyone, this is Blago. When you present your financial plan to investors, you want to answer four main questions. Number one, what will the financial future of your business look like? Number two, your financial plan is well thought through and achievable. Number three, what is the investment required to achieve your plan and what will be the return on investment for your investors? And number four, you want to give them comfort that you are in charge of your financials. So let me show you a one-page template of a financial plan that you can use to present your financial plan to achieve and answer all these four questions. So first, you want to show them six numbers. Number one, what is the expected revenue that your business will achieve this year or next year or in 3 years, whatever makes sense in your case. If you're already making a significant amount of revenue, then the earlier the year when you show your revenue, the better. If you expect to start making significant revenue in 3 to 5 years from now, then show how much revenue you expect to make in 3 years from now. So revenue number one. Then what is the growth rate in revenue that you expect year on year? 15% in this case. Now, the second thing is your EBITDA or your profitability. You want to give your investors an understanding when they can expect for you to become profitable. If you're already profitable in your business, then show that right away. What is your EBITDA? That is the earnings before interest, taxes, and depreciation and amortization. So how much EBITDA are you making? How much profit are you making now? And what is your profit margin? So 350,000 in this example, we're making a $350,000 of EBITDA already in next year in 2025, and with a 30% EBITDA margin. Next, you want to show them when you're breaking even. Again, in this example, the business has already broken even in 2023. It required 500 clients, but if you expect to become to break even at some point of time in the future, then write the year. Let's say 2026 is when we're going to become we're going to break even, and we need 500 clients in order to break even. Next, what is the investment required at this stage? How much money do you need to put in your business in order to achieve your plans? Simple number, $600,000 of investment at the moment. What is the payback period of this investment? We're going to pay back the investors in 2 years. And then what is the IRR or the return on their investment that investors are going to make by investing in your business? 35% in this case. Simple numbers, 6 numbers to give clear understanding of where do you plan to go. Now, inevitably, you will get a lot more questions. So you will need a lot more detail about how do you get to these numbers when you speak to your investors. So that's when you go to the next section. You show them your profit and loss. This is a short summary of your revenues over the next 3 years and all the way down to your profit. How do you expect your financial future to look like? So you have your revenue and how you expect it to develop over the 3 years. Then you have your revenue growth, important number to show year on year, how quick you're expecting to grow, your gross profit, and then a breakdown of your expenses, your sales and marketing expenses, research and development, and general and administrative expenses. You want to give your investors an idea in which part of the business are you investing the money that they are going to invest in your business. How do you split that between these 3 main sections of your profit and loss? And finally, again, what is your EBITDA for every year going for the next 3 years? How do you expect your profitability to look like over the next 3 years? So that's a summary of your profit and loss. Then you move on to the cash flow statement. Here you show them how much cash is your business expected to generate. How much operating cash flow? What is the investment cash flow that your business will have, or the money that you need to invest in the business itself? What is your financing cash flow? And finally, the most important number: what is your net cash flow that the business generates is expected to generate over the next 3 years? Once you've gone through the cash flow, then you move on to your profit margins. Extremely important chart to show. And there are 3 important profit margins that you should be talking about. Number 1, your gross profit margin, EBITDA margin, and the net profit margin. And what is important is to show how you expect these margins to evolve over time, over the next 3 years, and show a benchmark. How does your margins compare to the industry standards, to industry benchmarks in your specific industry? So in this example, we're seeing that our gross margin at the moment in 2024 is 65% versus a benchmark of 67%. So our gross margin is lower than our peers, our competitors. However, what we can see in our plan that we are expected to improve our gross margin to become better than the benchmark. EBITDA margin is already better, even in 2024, is already better than the benchmark. So apparently we're doing very well when it comes to to profitability, and the net profit margin is significantly better. We should be industry benchmark is 11%. Well, our net profit margin is between, at the moment, 22% going up to 30%. So we should be able to explain why is our net profit margin so much higher than the benchmark. And this could simply be because we don't own any assets, but our business is structured in a way that we are leasing assets, and we don't have much expenses for amortization and depreciation. We have lower taxes maybe in our jurisdiction where our business operates, and we don't have maybe other businesses in the market have loans, so they pay interest expense. However, we don't have much of a loan portfolio, so our net profit is significantly higher. So in any case, the important takeaway here is that you should show your profit margins. How are they expected to develop over the next years, and how do they compare to your competitors and to peers in your industry. Once you're done talking about profit margins, next thing is explain your customer acquisition channels. Where do you expect to find your customer? How are you bringing customers? To which channels are you bringing customers into your business? Organic, social, affiliate, whatever the relevant customer acquisition channels for your business. Just to give your investors a sense that you know exactly through which channels you're going to be bringing your customers to your business. From there, you move on to your conversion funnel. You've brought your customers through these acquisition channels. Now you need to show them how efficient are you into converting potential customers into actual clients. So this is your conversion funnel, starting from prospects, people that first find out about your business, and then they go through the conversion funnel until they become a client. And you show your conversion rates. What are your conversion rates from a prospect all the way down to a client? And what we can see in our case here, the conversion rate for us is 19% from our prospect into a client. Always compare that to a benchmark right away to show to industry benchmark how well are you doing versus the industry when it comes to these conversion rates. And in this case, we seem to be doing better than our competition. Our conversion rate, final conversion rate, is 19% versus 15% of the market peers. So once you've gone through showing your conversion funnel and showing your customers, you exactly know what are the steps from when someone becomes a prospect or a potential client. What are all the steps that they go through in the funnel in order to become a customer? And the final section of your financial plan presentation should be your operating KPIs. These are usually up to the 10 most important operating KPIs that you follow, that are relevant to your specific business, that you follow and you manage your business based on the information, based on the quantitative information about these KPIs, and then also compare how you are performing on those KPIs versus your peers versus the market. And again, this is just an example. The KPIs, the operating KPIs, are different for different businesses. But in this case, let's say that this is it's an online e-commerce business, for example. So you're looking at your average order value, the number of orders and how they're growing, your traffic that you get to your website, your conversion rates, and what % of your customers are active customers. They keep coming back and buy from you on regular basis. How many orders per month do you get per customer? What is the churn rate of your customer churn rate, stock out rates, and customer acquisition costs? Just some examples of operating KPIs that you should be following. When you can show to your investors that you know exactly which are the most important KPIs for your business, they get the sense that you know exactly how to manage your business. What are the important things that you need to focus on in order to make your business a success? So, in summary, this financial model dashboard allows you to answer the 4 most important questions your investors will have. 1, they will understand where your business is going to go financially in the future. Number 2, they will gain trust, build trust that you have thought through your financial plan and that this plan is achievable. Number 3, they will understand how much money they're going to invest, where are you going to invest those money, and how much return they're going to get for their investment. And number 4, well, they will build trust that you actually are in control of your financials, not only of your operational processes, but also of your financial aspects of your business. So don't use this dashboard in your first meeting with potential investors when you have 30 seconds to explain your financials. If you have only 30 seconds or a minute, then all you need is the first 6 numbers of the dashboard. Use this dashboard when you have between 5 and 10 minutes, when you go deeper into your financial model. If you provide this information to your investors, this one-page template, which has a bit of detail about your financials, I can guarantee you that you will build trust and that the financial model is well thought through and you are in control of your financials. And then the conversations will become much less focused on the financial part and more strategic discussions about your business and your team. So that's it. I hope this section was helpful. Subscribe to our channel. There are many other interesting subjects that we talk about literally on weekly basis. Have a great day.